Here we go. But yeah, yep, time decay would have been chewing away at it. Yeah, again, it went up to what 430, 435 multiple times. So that was just wasted time until it did what it did today. But yeah, so we look at Meta. Let me clean some of this up. Meta actually has room to continue if the market is going to allow it. Looks like the market is running. So Meta, again, we talked about the falling wedge is the if when you're trading options, this is what you really want. You want to play a falling wedge every time. Those are the easiest ways to make a lot of money on option trades. So we see that Meta bounced here at 496, went up, it made a falling wedge down here and it's popping back out to the upside. So it popped back out. This was the level to break around 600. It broke 600. Right now it's at 613. And going into this, it was at what 500, topped out at yeah. So honestly, this pattern could take it to 700. This pattern right here could take it to 700. Not 700 right now because again, this is the weekly, right? If we're looking at the daily, then that means that okay, it could be reaching 700 within like 2-3 weeks. But since this is the weekly, every single candle represents a week. This may take maybe 3 weeks, 4 weeks. So 4 other candles. But
So my buy point is 563.
mhm.
Should I just hold it or take some profits?
In my opinion,
Yeah,
for
563.
me,
I
I
only
would
have 8
shave
shares.
I would shave some profits. Can it go even more? Yeah, I think that again, I'm saying 700 on this because the RSI is at 65, so it's not all the way up to 70. And since this is a week, this is going to take some time to actually get to 70. Then if you look at that MACD, that's what you want. That's good money right there. These two are about to flip, and you can see it really haven't flipped yet. We just came from selling pressure being dominant. We're going to go into some green where buying pressure is dominant. The two lines are literally crossed over each other, and we have a lot of momentum to the upside. And then when we check that stochastics, this is what you want to see as well. This is what under 50. This is a 43 stochastic that can go up to 50, 80, 100. So Meta has a lot in the tank, and it just came off of touching this 20 MA. So it went up. It was too far off of that 20 MA here. This is at what about 600? This 20 MA at the time, so about $75 off his 20 MA. Came down where about right here, about 540, and then it popped out. So it's just coming off a rebound of being pulled back down to that 20 MA. So still some gas in the tank. It may be in the 700s before, what is this? This is January 25th. I mean 29th. Yeah, believe it or not, this could be 700 before its earnings. But the thing is, will the market allow it? Right? Is there enough space for it to run up that much? So let's look at a reference. Well, actually, let's look at lower time frames first, and then we'll look at a reference. So let's actually move up to the month. So if we look at the month, that RSI is pretty hot. Crazy run up from 93 on the monthly. This is, I mean, this is crazy track record since what the end of 2022. Every month, and yeah, still space on the stochastics. So high RSI, space on the stochastics. If we go down to the day is looking like that we've punched the roof at 100, and it looks like we either coast like this or we can make a U-turn back to 80. The 4-hour would tell us a lot. Also, this 20 MA that crossed underneath that 50 is about to cross back up above that 50, and that means that all of these moving averages are going to be back in order. And that means that 20 is going to be the low for whatever this pulls back to. So as long as that 20 continues to climb, that's going to be the bounce point. And it looks like this area in here, about 595, is a place where it kept rejecting before, rejected here, and then it finally broke through some force here. And I mean, if we look at this, again, this is the run to 700. And look, you can see it here a little better. It loaded in from here down here about 502, 501, went all the way up, consolidated, and then broke out. And it's going to break out some more force to the upside. But again, this one is a low and slow. There's going to be some pullbacks for sure because it went up too fast. Like 100 on the stochastics on the day means that the week is going to be good. You're going to, like, if you're looking at it like this, you're going to be green on the week, but you may have a day or two of red in there, right, out of 5 days, because we're going to need some pullback at some point. It's going to have to cool off. It's going to do a retest, and I think it may retest at the lower 600s, and then it's going to move back up. And I think that's all going to happen within the same week.
So do you think I should enter?
I would wait for a quick dip. I think a quick dip can happen. Is that what, 613? I think we get a retest at about 605, 600, somewhere in the area, and then it goes back up because it just broke through with force. But if you look at the lower time frames, we maxed out. The stochastics is at what, 95? It just tapped what, that's 98, and then 100 here. Looks like it wants to cool off. That RSI is at 75. I mean, it could go up to 80, but eventually you see what happens when it went to 80. It came crashing down. So a pullback is needed. Stock is hot. And on that next pullback, that's going to set the stage for it to continue to climb higher. And it could be a quick pullback. It could be, again, this pullback that I'm seeing that can happen is going to be like during the week. So you, again, if we're looking at 5 days, you may have 2 or 3 that are red for a pullback because we need to cool that RSI off. We need to cool the stochastics off, and then we'll be going back up. So if you just want to wait it out, you can. If you want to shave some profits, you can. But this is finally breaking out along with other things that are breaking out. So if we reference trade, we look at its peers and we look at the reference, which is the SPY, you'll see what I mean. So if we look at Microsoft, right? Microsoft is finally breaking out.
I don't know if it's breaking out. I think it's going back into the channel. It's at the top of the channel. It might come back down. We don't know if it's going to move past it. It has to break 440, and it hasn't done that. It could, right? I mean, it's about time, but...
Well, no, the channel that I was talking about was this one down here. Not this upper one. Hold on, let me, what did I do to it? This one. But yeah, this is another level that it needs to break. Honestly, if it breaks this level, we can see it at 445, but then, well, no, it's still some buys up here. There's a lot of buys in between here. But yeah, if it breaks here, it looks like it rejected. Is this the daily? It looks like it pulled back today. It went up to what, 440, 439 and some change. Pulled back to 437. But yeah, all of these are setting up for breakouts. So we got Microsoft that is moving up. It finally broke out of this pattern below these, like stuck in this 430 to 408 to the bottom side. We got Apple. So you got Microsoft is finally starting its breakout. Meta is already broken out. You got Apple, which again, Apple was channeling the same, same numbers since, what is this, July. And it was stuck here for a while, around the 230 area for a while. And then it started to bounce to the high. It rejected one more time. It actually rejected twice, here and here. And then it just came out with force. So if we look at the references, we can look at the SPY too. Everything is getting to where, yeah, the SPY, actually, this is a level for it right here.
I think the SPY is going to come down. I think it's coming down. It's just too high.
Where do you think it's coming down to?
I think it's gonna come down to, what's the line? The first yellow line.
This?
Yeah.
The 20?
Yeah.
596?
I think it's gonna come back to 596, 600.
When? It's
That's
going to
when-
come down for sure, but when?
Anytime.
Yeah. We got Jerome Powell tomorrow. But yeah, everything has been moving. All of the big dogs have been moving in unison. So they're carrying the SPY up. Which again, for a while, I thought the dip would be a little deeper. With the fact that Nvidia was moving down and it was bleeding, but everything else was going up while Nvidia was going down for a while. So it kind of stabilized.
I am thinking of selling half my Meta shares. I have 8. I'm thinking of selling half. Take the profit. Keep 4. Take half the profit in case it comes down so I can buy more.
Mhm.
And I think Microsoft, my buy point is 415.60. I'm thinking 5% up. What do you think? It's only 5% though. I'd like to shave profit around 10%.
And you're up over 5%?
5.25%.
Oh yeah. Well, it's not bad to take whatever, off whatever you put in my opinion. I would be careful. Jerome Powell speaks tomorrow. Would you feel bad if you didn't take the profits? Like, would you? Because I think what's going to happen, again, when I look at Meta, can Meta continue this run? Can Microsoft continue this run? Can Apple continue this run?
What do you think?
I think these breakouts, huh?
Well, we've been waiting for Microsoft to break out forever. Meta has been slow.
Right. Well, everything else was running. You're right.
And it should have broken out because Meta killed its earnings. Microsoft killed its earnings. Do you know what I mean? Like,
yeah, I don't know what's going on. Again, Microsoft, Microsoft should be almost $600 now, if you ask me. But yeah, it looks nice on the weekly, 57 on the RSI. Finally waking up and breaking that level. It pulled back a little bit today, but we still got the rest of the week to build this candle out. 450 is really the number to beat. And we got this MACD crossover, which is nice. And we got the stochastics at 70. So there's space to do damage on the weekly for Microsoft for sure. It's just, what is Jerome Powell going to say? Now, if Jerome Powell hops on tomorrow and says, we're not getting any more rate cuts for a while, then the market is going to pull back. But if Jerome Powell says, rate cuts are still on the table or something akin to that, we should be back to the races.
why did it run today? What happened today? It's been running for the past week. It's good. I mean, I'm happy, but I'm just surprised.
I think it's just being carried with the market. I think people are loading in, like, this is a lot of buy activity across the board, right? It's not just like one stock is being bought up and all the other ones aren't. Like, people are buying Microsoft, Meta, Apple. Like, people are buying the top of the S&P. That's why everything is moving like this. And then, I mean, a good watch of the market is when Nancy Pelosi sells Nvidia. She still hasn't sold any. So she made like 9 million this week off of Nvidia. So while she's holding Nvidia, we're safe. Once we start to hear that Nancy is offloading her Nvidia shares, even if we hear that she's converting options into actual shares, that's actually good. But nope, she's still not selling. So we're in the clear market wise. She got other options too. I think Google is an underrated play if you ask me. Yeah, that looks nice on the day. Pendant MACD crossover, stochastics climbing 55 on the RSI. And it's slightly above its 20 MA, so it's back on top. So we could get a push back up to 180. I think I said that in the Sunday session. But yeah, Google is a slept-on play. Because this whole run up from what, 130 to 190, Google can go for 250. It needs to break out of it. First of all, it needs to break that 190, but it needs to break this 180 first. And I mean, on the daily, it's set up for it for sure. If we look at the 4 hour, it's above all of its movement averages. Let me see, what's that? RSI. RSI is at 58. MACD crossed over to the upside. That's stochastics is up there though. So stochastics is at what, 99? Even if we do flat like this, maybe for a day or two, it has to cool off. Where it's gonna cool off to, I'm not sure. Let me check the 1 hour. Okay, the 1 hour is already starting to cool off on the stochastics at 92. So a slow and gradual move up to 190 looks like what's in store. Let me see. Yeah, this MACD doesn't know what it want to do here, but it's back to the upside. Cool. Yeah. So yeah, I think Google's going back to 190. Is it gonna go fast? Probably not. Google doesn't move fast. Questions, Ty? Nope. Jay, do you have any questions? Any stocks that you want to look at before I talk about straddles and strangles?
Is there anything else that's looking good to buy or just kind of hold? Because I've been just kind of holding.
There's a few things I've been keeping my eye on.
I mean, Oklo's coming down.
Let's see. Still doing his dance. He could go right back up. It's flagging too. It's making a bull flag, but it's just chopping. And there's a lot of volume. This is a lot. What is this? How many? Yeah, this is a large block of volume right here. If it breaks below like 17, so if it comes all the way down this far, 17, 18, it's going to bounce at 16. But this is way too much volume. I don't think it's going down. I don't think it's going to get down that low.
You think this is a good entry point for Oklo?
Yeah, I think between 20 and, well, it depends on your exit too. Like if you want to exit at 30, 40, then 20, yeah. But if you're looking to exit at like 25, 30, then you may want to get it at like 18.
Well, you know some major hedge funds are shorting it, right?
Yeah, but again, I still think nuclear is going to do good. And I think Oklo is going to be one of the front runners, even though they're shorting it now. But this is where you buy low, you sell high, right?
Yeah.
If everyone is already buying it, it will be sky high, and then you wouldn't want it. So the lower it is, the more attractive it's going to be. Oh, this is what I want to keep an eye on.
Oh, Baba's coming down.
Keep your eye on it. Yeah, remember I said that it could get low as the 70, 80 spot when we're looking at it at 87. Starting to flatten out a little bit, but that 20 is just carrying it down. If you can get this at like $70, but I think this is going to run. I think Baba is going to be a surprise for a lot of people.
Really?
Yep.
It's
even if it goes, just look at it like this. Let's say if you get it at $70 and it goes back up to 120, you just made $50 a share. Even
okay.
If it just goes back up to 120, right? Which it frequents 120 has, look at that. Up. All right, let me reset this chart. Here we go. And turn this off. Turn that one off too. All right, yep. So you can see this 120 line is pretty much to make it or break it. It started back here. We got a couple taps here, 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 and here. So if you get it at 70, what's it, 75? 70 is all the way down here.
But is it coming to 70? That's dirt cheap for it. That's dirt cheap for Baba.
It's dirt cheap now. Look at this.
Yeah, but who's touching Chinese stocks now with Trump in power?
Exactly. It's like, think about it like this, Ty. Baba and the other Chinese stocks hasn't been doing well since Biden has been in office, right? If the policy changes on China, China has been playing nice with Biden the whole time. But with Trump, he's not going to play with them. He's already talking about tariffs. China's already talking about working on their own infrastructure, which they should have been doing. But that's why everybody is thinking that China's going to be attractive, is because they're going to turn inward, which they should have done that a while ago, but they're going to turn inward and then build their own chips, build their own AI infrastructure, so on and so forth, and stop being so dependent on other countries for it. Because we keep like borrowing them for buying certain materials and things that they need, borrowing them from certain technology. They fire back and they're banning the US from certain materials too. So we're already starting this little back and forth when it comes to tariffs and trade and things like that. But I think that will strengthen Chinese stocks, because then they'll take all of their resources and focus inward then versus focusing, in other countries. Philippines, Europe, US, you name it. So that's what everyone is looking at China for. And there's a lot of big dogs that are looking at it like, oh, okay. People aren't, because to think that the market's going to do what it did again this year, again next year, it's a dangerous gamble. But yeah,
What about people are talking about Tencent being really good too.
Tencent, what's their ticker? Tencent.
That's it. Tencent Holdings.
Oh, this isn't. They have a. Yeah, this wouldn't be right.
Is this the right one?
No. What's their ticker? I can't find them.
Let me search.
Oh, here it is. This one.
Yeah.
Yep.
I hear this is one's really good too.
Yeah, I mean, all of these companies are great companies. Like, you look at how much money they're making revenue-wise. I mean, they just missed on revenue by 2%. Earnings is good. Good companies. I mean, if they're in the US, it would be different. This one has been climbing too. It was a good buy point down here at $23, and now it's at 51. This is a good break spot too. A historical resistance that it needs to hold above, which is at what, 55. It breaks 55. It's gonna have a hard time at 60. After 60, it gets a little weaker and it moves up with every $5. Yeah, I think China's gonna be attractive.
Okay, so 10 cent. TC
Baidu is another good one too. You said what now?
TC EHY.
Oh yeah, TCEHY.
Okay.
This is another good one. Again, these are at, you said dirt cheap. It would be at, these companies would be dirt cheap, $10 less. It's dirt cheap now.
Are you taking a position in Baidu?
I'm looking at Baidu and Baba together. I'm looking at both of those. I held those in the past. They did pretty good for me, but then they started to stagnate, and then we got out of them. It was a few of us that actually got into Baba. When it was down it was like 60, $70, somewhere around there. And again, we took it up to 120 and it got stuck. And then we just said, all right, well, China's not going to do right. But the fact that it's been tanking so much and it's sitting on that, we scrunched the chart up a little bit. You can see that the last time it did that, tanked all the way down and exploded. Again, falling wedges is one of the easiest things to play in my book. This is a double top actually. Went up, came down, and then it actually popped too. And it came down on the first drop. If you were to bought,
this looks like a great chart. That looks like a great chart.
What do you mean?
Like this looks like it's at a buy point. That looks like a great chart.
Yeah.
It's hitting support.
Yep. Sitting right on top of it.
Yeah, let's look at VRVB and like all the indicators. Let's see. Maybe I'll buy this tomorrow. Oh, there isn't a lot of orders.
Nope.
There's a lot of sells. There's a lot of buys waiting for it to go. Oh, crap. Look. There's a lot of orders waiting for it to like hit rock bottom. Do you see?
Yeah, it's slightly up more than down. You got 545 up, 522 down. So more up volume than down volume. You get up here, you got more down volume than up. But then once you start to break over this middle around 120, you start to go up into these areas, you start to get more up than down. And then once you get up to the 160s, it kind of even out. But I mean, if you get in at 85 and then go up to 160, I mean, I don't think anyone's complaining. But there's a lot of buys down here.
Right? It's a little scary.
But I don't think it's going to get that low. If it's going to get that low, I think it would be there. But this is a major support for it. This is support from 2013, 2020, 2022, and 2024. So it's still respecting that. It's bouncing at the same point, even years apart.
Damn.
So I like this one.
You don't think? Okay, so people who put all these orders at 28, like, does that mean that there's a probability that it'll go there because there's so many orders there, or no? People are kind of shooting in the dark.
Nope. You got a lot of people that those orders could be sitting down there from the fact that this kept dropping, right? Or it could be some people that bought this all the way back here. But the fact that this kept dropping here, that people think that it's really going to go down that low. I doubt. This is at what, 80 something dollars right now. I doubt it's going to 20. This is a company that makes what, 20, 30 billion dollars a quarter, and they're going to be worth $20. I can't see it. Ford is worth what? Ford is worth like 40, 50 billion. They make about half of Ford's market cap every 3 months. I can't see this being down in the 20s.
Damn. Okay.
But that's why I like, yeah, that's what I like those two. If you ask me about China, Baba and Baidu are my top two. Not saying
Is
that
there
they're, I just think from the financial standpoint, they have a strong balance sheet, in my opinion.
anything else you're looking at buying?
Um, Baidu, Baba. I'm thinking about buying some more TMDX. I think it's time. I really,
LJ, Jesus.
it happens. This is when you buy volatility again. I've been watching this stock since it was $26, $79. I'm there, but I seen it when it was 26, and when it went all the way up here to 180 from 26. This
Okay,
happens. Huh?
I'll put it on my watch list.
Yep. But yeah, I think that again, this is how you play the game. It's like Buffett buys beat up companies. But Buffett's not going to buy something that's already running. I call these the Buffett buys. You find something, you find a great company, great financials. The stock is just in a bad space. You just buy and accumulate and hold.
The chief commercial officer just sold shares.
Yeah, I saw that.
Maintained with 125. Share by Oppenheimer. Really?
Again, I mean, the financials for this company is I mean, nothing to scoff at for the market cap. That's what I'm looking at with these. With these longer plays, I'm starting to get wiser when it comes to like, okay, if a company keeps making money and keeps beating earnings and keeps setting itself up the right way, eventually the money is going to flow back into it. It's just like a firm, right? We look at a firm is doing great, right? Nobody wanted a firm down here. When a firm was $10, you could have 7 extra money if you would have bought. And it's not like it wasn't down there for a while. It was down there for a minute. No one wanted a firm down here.
It was down there for like over a year.
Yeah, but nobody wanted it, right? If you would have bought it, it was $10. You could have bought some Leap options. You could have bought some shares, whatever. It was only $10. You could have turned $1,000 into $7,000 in shares alone. But again, we're saying that now that it moved up. When it was down here, if you block off this whole part of the chart, no one's saying that. Right? When it's down here, people are like, oh, okay, it may go lower. That's how you do it. You find a good company at a bad time. That's why when I look at those Chinese companies, I'm like, okay, cool. They're making a lot of money. When I look at Transmedic, same thing. Doing great. It's just at a bad time. That's when you buy.
Okay, so a firm. Okay, so maybe for the class, take me through how you would position an option now.
On which stock? This one?
No, pick something that looks like it's that we could put an option on it.
Okay.
Maybe explore Microsoft. Let's see about Microsoft. I'm curious.
This is one. We'll look at Microsoft too. This stock.
What is this?
It's called EDU. It's basically a Chinese educational platform stock. This one, we called this one when we first started when we first started doing like Sunday sessions. I want to say in 2022, 2021. So around in this area. We told everybody that this one was going to run, right? This stock at the time was like $3, $4. Today is $61. We have matter of fact, we have somebody in the group that bought 400 shares when it was back down here at about $3 or $4. And one day, her name's Anna. She called me and was just like, "Hey, I'm still making money off of that EDU that we bought years ago." And when she told me her percentages, it was something crazy. We also had a person that was up over 2,000% on a 2-year leap call that they bought.
They did a 2-year leap call?
Yeah. And the funny thing is, this is how you know that the stock was cheap. It was a $2.50 call. And the stock right now is $61. And people thought the stock was done after this. Like it was up here at what, almost $200. It dropped all the way down here and we still bought it. Again, when you understand how the market works, this is a Buffett move. You buy things that people don't want. If you're buying everything that's at the top, at the highs, of course you're going to get that rush. You're going to get a move, but you're going to be on edge. If you're buying something down here.
Okay, question. Why aren't we buying Domino's? He bought a ton of Domino's.
I haven't seen what they look like.
You know he bought Domino's, right?
Yeah. But he also bought Ulta and sold that.
Yeah, he got rid of Ulta real quick.
Right. What's Domino's ticker? Oh. Nope, that's not it. Is it? Nope, Domino is not. There you go. Oh, it's making a comeback after this drop. So he did buy the dip. This looked like something he would do. I mean, you could. It's at what, 468? The choke point is around what, 500. It keeps stopping out around. Actually, that's like 530 top side, and it could be time for it to break out. It doesn't look bad. That's a cup and handle, if you ask me. Where's my?
I mean, also, it's moving because he bought it. Do you know what I mean?
Yep.
One of those things where it's like
the Buffett effect, right? They want to make money with the greats. Where's
the problem is that they don't get the price point he gets.
They don't get the what?
They don't get the price point that he gets. You know what I mean?
Yeah, you don't get that, but I mean, you get, well, if you're in it before, then yeah, but you don't get that, but you still get something. This is a nice cup and handle. This is a cup handle. If it breaks that 500, this is going to explode. Because
Domino's makes the worst pizza.
Oh yeah, I don't like.
Oh, gross.
Yeah, I like Blaze pizza, and I like Da Vinci's. I don't even know where Domino's at. I moved to a different city. Well, a different side of Atlanta.
Domino's is everywhere.
But yeah, this doesn't look bad at all. It's a cup and handle. If you want to block out the rest of the cup, this is a bull flag. Looks good. This is just on the weekly, so it's going to take a minute, but I think that's Buffett style. He wants something to take some time to get there so he can keep buying it. He can really load up on it. But yeah,
LJ, when you would do a leap on?
A leap on Domino's. Yep. This is one. If I'm doing a leap, I wouldn't set it no higher than right here, 525. I would set it up right there. This is also making an inverted head and shoulder. This is an extremely bullish pattern. So let me show you the patterns that it's making. So we're going to look at the inverted. It's making 3 bull patterns in one. Doesn't mean it's going to move fast. It just means that it's going to move up. They call it an inverse. I think on Investopedia, inverse head and shoulders, I think is what they want to call it. There we go. Bingo. All right. This pattern right here is what it's doing. Again, head and shoulder patterns are, I say this all the time, they're one of the most successful patterns at, I want to say about 85% completion. But shoulder one, head, shoulder two. We look at this, shoulder one, head, shoulder two, and it's coming back up to that neckline. So it's not picture perfect, but let me show you a good example. So you got this shoulder, right? Comes up, makes that shoulder, goes back up to that neckline. So it's forming that neckline, came down into a head, so a big dip, came right back up to the same neckline. The shoulders do not have to be identical. You can see this one is kind of flat. That one's more of a cup. And then the breakout was right there. So the way that you play these is that the safer entry could be at the top of the neckline once you break through the neckline, because you can reject at that neckline, or you can play from the bottom side of this shoulder. So once you find the bottom support for this shoulder that's being formed and it's coming up, you can play the rest of that shoulder up to the neckline, take profit, and then load back up for the breakout to the upside. So when we look at this, shoulder one, head, shoulder two, the neckline is like up, is really right here.
So, okay, so I am doing research. So it says that TD Cowen put a buy target on it, 475 to 515, which is around
You said which is around what?
what you have. So they raised the price target, TD Cowen, from 475 to 515. So maybe the leap should go to 515.
Yeah, you can set leap at, yeah. That'll work. 515. I mean, you know me. You could put it in the money if you want, if you wanted to, just to be safe. But if you want to get some space, you want a better price contract with a little bit of volatility added to it. Yeah, 500, 515, 525. I wouldn't go any higher than this right here. I wouldn't go any higher than 523, 5. Well, they probably won't even have a 523, but a 525 is where I would stop as far as my call. Anything below that, in my opinion, I think is cool. Just kick it out and, you know, add some time to it.
Would you do a leap, or would you do a call option?
They're one and the same.
Are they?
You can do a leap. Yeah, you can do a leap that's a call. You can also do a leap that's a put.
So if I do a call option on Domino's, okay, what's the time frame I'm looking at?
Honestly, I would give it like 6 or 7 months minimum on forward. So a year, because again, we're looking at the weekly. So this is going to be slow. And it's a giant stock at $468. And it's a slow moving giant. Like today, it went up $4 and it's a $460. Like it's going to be slow. So, you know, if you're fine with that, then yeah.
So if I give it a year, then 6 to 7. Okay, so 6 to 7 months to a year. What's the call what's the price?
Like the strike?
Yeah, the strike price.
Yeah, the strike would be, again, I wouldn't go any higher than 525. The lower, the better.
Should I keep it closer to this number or keep it closer to the 500 number?
Closer to the 566 number or the 500 number is what you're saying?
Closer to 466 or closer to 500?
Oh, 466. That would be the better price. Oh, I mean, that would be the better outcome because it's safer. You don't have to worry about time decay once time speeds up. But that would be what I would be paying attention to. Closer to 466. 500 works. It'll be more affordable. It's a cheaper contract, and it also will give you a bigger punch as the stock starts to move up through those prices.
So should I do what's a good strike price?
I would say 500.
Can we look at the options chain on it?
Yeah, we should be able to. It's my trading panel. Nope.
Like, is this an option you would take, LJ?
I don't know. This is my first time seeing it. I knew that Domino's was good. Honestly, yeah. Reason why I'm saying I would do this one is because I really like the technicals on the month. Stochastics is super low at 29. The MACD is doing its dance. I don't know which side it's to. It's still to the upside. It went to the downside for like one tick, popped up to the upside. I really like the pattern that it's making. Started here at 306, went up. This is a nice bull flag pattern, which again, inverted head and shoulders. And again, if we stretch it out, you can see it's a cup handle, taking it back up there. Again, my only quip about this one is that it's going to be slow. It's like guaranteed money that's slow. But again, that's why you see Buffett going for stocks like this. He likes the slow money. He likes the guarantees. So yeah, 7 months to a year out.
And he just bought the shares.
Yeah, I want to say, didn't he buy them a quarter ago?
Yeah,
So
November.
they report every 90 days.
Yeah.
Yeah. So yeah, he's just getting in, which I mean, this is still close to like the local bottom that it just had, right? It went all the way down to 400, 402, somewhere around there. And it's at 466. So if this goes up to 600, he's making good money. And I'm pretty sure he may have put 100 million or something crazy in it. So
he bought over 1 million shares.
see.
Yeah, he bought a lot.
Right. Yeah. 1 million shares is crazy at $466. But yeah, I think I think Domino's, again, it's going to be a steady winner. Slow is this. You're going to have down days. You're going to have up days. But overall, it's going to be up. And it's going to be slow. The whole market ran today. This went up $4. So it's not going to move like Coinbase. Coinbase, you're getting 10, 15% in one day. On a good day, you're getting 1% from this. But you may get 1% every day for like a month straight, which that's not bad either. It's just it's just a slow grind up.
I'll take it.
Right. Yeah. That's why I was like, that would be my only thing, is that if I needed some volatility and speed, I may not go for this one. But if I want something that just sits in the background and that's slowly making me money, that's what these companies are like this are for. But no, this is a good one. I'm actually going to call a play on it because I need to check the lower technicals. Oh, it's just coming off of so it's ooh.
I don't like that when you go ooh.
Yeah, because on the lower technicals, so it dropped all the way down. It found its bottom at 404. The thing I don't like is the fact that it is now up against this right here. This level, we got a lot of rejections, and this is right before it dropped. So we could we already got a pullback. It already tapped up here at about 480. It pulled back down to about 458. But the 20 is on the way. The 20 is on the way to save the day, but this is still going to come down. This is a 200 right now that is dealing with. So if that 200 holds and it gives time for that 20 to come up, that 20 can push it back up against this 480, and then we can break. The next level would be 500. And then after that, we're looking at, that 510 is going to hurt too. You can see there's a lot of sales right there with that yellow. How many sales is it? Sheesh. Yeah, you got 372,000 sales with 167. So 200,000 more sales than buys once it gets up to about this level here. or right here, 510.
Right.
So again, slow grind up, and we're looking at it on the weekly and the monthly. So you're good, like I said, you're going to have some down days for sure. It's just, are you patient enough? This is again a nice setup. A lot
But
of
you don't love it. I don't hear that you love it. To be honest.
it's just slow. It's just slow. You get what I'm saying? Like
You're just like, yeah, it's good. It's good. It's good.
it's just slow. It's like that's the only thing is like I'm only but so patient. So what I'll do is this, because I think that in the midterm, because entries are
What
going to
you
be important.
say from your voice, from your tone, it sounds like if you really want it, buy the shares. But the options, there's not enough volatility. That's what I'm hearing from
I think
you.
the volatility is. I think so. The volatility is just going to happen over time. Like, is the thing that's going on in my head is like, okay, are you okay with making 4,000? Let's say you make a profit of $5,000, right? But you can make that profit of $5,000 in 2 months, 1 month, or you can make that $5,000, but it's guaranteed in like 7 months. So that's what's going through my head.
Yeah, the safety factor.
Right. This is extremely safe, but it's just slow. That's the only thing.
I mean, Domino's is known for their technology. They use drones. They get the pizzas out there fast. They're cheap. No, I'm serious. They're really
No,
well
I
known
know
for
you are. I know. I've seen the commercials.
with the damn drones.
Yeah. I think I would. So I'll get in this one. I need some slow plays, honestly. I need some slow ones because I'm always like, I'm looking at the high flyers. I'm looking at Celsius, Transmedics, Affirm, and I'm letting the other ones just sit in a slow moving portfolio and not really paying attention to them. But I need some dividends. I need some slow movers. I think this is going to be one of the ones that I get in. But I need to
What's the
before I
dividend on it?
enter, $1.50 every, what is that? December, September, every
Are
3
you
months.
kidding
So this is
me?
a
For like $470, you get $1.50. Come on.
right. This is kind of Buffett's thing. He likes stuff like this.
You want to spend $470 to get a kickback of $1.50?
I mean, when you spend like 50 to 100 million on it, that dividend is a little different.
That is true.
You're getting what? You're getting what, $1 million a quarter? $1 million to like what, 3 million a quarter? I mean,
This guy spent $466 million friggin' dollars.
right. So he's getting, yeah, I'm right. So he's
getting seven. Oh my friggin' God.
he's getting a couple million every quarter. So this is where I like to talk to people about percentages. Like his percentages
Okay,
are
but like,
percentages for
we're
us.
not buying what Buffett is buying.
Huh?
We're not buying the amount that he's buying.
But the percentages are the same.
Yeah, I know, but scale
You
matters.
take the amount out the way, you look at percentages, it's all there.
So you think this is a good entry point right now, or wait?
No.
Because look, because the daily is high.
Yeah, I would be careful on the daily. I think a good entry, 466. A good entry would have been 450. And that 20 is at what, four? Yeah, that 20 is at 450. Yeah, 450 would be a good entry. It's also losing buying pressure.
Yeah, I see that.
And then this stochastics is already cooling off, and it's almost at 50.
Yeah, I think it's coming down. I think you wait.
Yeah, it's only up 1% today.
Yeah. because he bought it my God, he's smart. He bought it mid-November. Look at where the price was mid-November. Right there.
Yeah, on a this is a major dip right here. It was
Yeah,
at
exactly.
60.
The
and it
issue,
came right back.
the problem is that the filings happen after the fact.
Yep.
So we're finding out. You know what I mean? Like
Yep, he
around
was
this
already
time,
in.
he's already in. He already bought the dip.
Yep.
He's already making money.
Oh yeah, and it closed that gap. Yeah, that's a nice play by him. It filled this gap right here.
Sometimes, just buy Berkshire Hathaway.
Right. Right.
Like you
Right.
can't even follow his moves.
Yeah, he played it smart here. He played this gap. That's crazy. I mean, yeah, if you go back and look, you can see what he's trying to play too. He's playing this right here. He closed this gap already. And he's playing this gap right here. So I mean,
what's the significance of the gap?
the significance of the gap like this one,
Yeah.
there's a drop. So there's a drop off in volume when that happens. Like let's say this happened on Ernest, right? Wait,
that Yvonne in the background?
Let me catch your muscles.
No, I don't think so. Jay, your mic's unmuted. Hold on, I'll mute it for him.
Wait,
Oh,
Jay,
okay.
Are you related to Yvonne?
Me?
No, Jay.
No, I don't think so.
Okay. I remember when Yvonne brought her
My bad.
son one.
That's my mom.
Oh,
I heard her in the background.
where? When? Just now?
Yes.
No, that wasn't my mom. That was my wife.
Oh,
She
okay.
open a ginger snap thing. We all come over
Oh.
to her and learn about stocks from her.
Oh,
okay.
yeah. No, I said no. And I was like, wait, where did you hear her at? I'm like, is Ty going crazy or something? But okay.
No,
Makes
but I got the family relationship right.
Right. Yep. Spot on.
So, okay, you know what I realized where we all made a mistake with Microsoft?
Where?
Well, with Microsoft, when it didn't go past 440 the first time, right, and we were all frustrated, we should have bought another call option on it and just extended the time. Do you know what I mean? Like, do you remember when it sort of like, was it like,
Here?
it was around, yeah, it was around like 412, 410, 415.
Yeah, here.
And it frustrated all of us because it didn't do what we wanted it to do.
Mm-hmm.
Like when I sold off my option, I should have just bought it back.
Yeah, you'd have
Like,
to buy it like a dip. But this is so it gapped down for earnings, right? This is the last earnings it had.
Yeah.
And it
But
shot
it went
down from 430 to almost 400.
Yeah. But then it tried to kind of climb up and break 430. But I feel like at 400 is when we should have bought another option on it.
Yeah, down here. Yep.
Yeah, we made a mistake. All of us. Because
Yeah, but you would have had the whole. So even if you bought down here at 400, you would have had to have enough time on that contract to go through this down, this pullback that brought it back down. There we go to 415.
I would have just bought another 5-month call option and then just kicked the bucket on it as it went to 420. Do you know what I mean? And made some money.
Yeah, you could have. Yeah, you could have played this down here better.
Yeah, I think so. I think
Well,
so.
I
I think we were all
Patience.
so frustrated by Microsoft that we just like put the dish away. You know what I mean?
Yeah,
But
it hurts when everything else is running up but the stock that you bought.
I know, but I think we made a mistake. Like instead of putting the dish away, we should have, brought the dish back.
Yeah,
So,
instead of walking away for another trade.
Yeah.
In situations like that, if you ever get in a situation where you're down a little bit, do you ever roll or do you cut your losses at the 10%? Or
No, yeah, no.
whatever it is?
No, sometimes it depends on, really for me, it depends on how much capital I'm putting in a trade. Like sometimes I like to have fun. I'll do $100 trade or $200 trade. With those, I'm willing to lose like 40%. I put in $100. I'm cool with losing $40. But if I'm doing like a $5,000 trade, I'm not losing 40% of like I'm not doing that. If I do a $5,000 trade, I'm looking at losing. I'm cool with 500 to 1,000, depending on how long I set that trade off. If I'm doing a $5,000, $10,000 option, it's probably going to be a leap. It's going to have some real time attached to it. So it just depends on how much capital I use with it. But I don't roll when I'm losing, because you're just gonna widen that loss by rolling while being down. In my opinion, I think you should roll while you're up. Yeah. Because if you roll while you're up, you're taking, so let's say you buy one contract, right, Jay? You buy a contract and you only got one contract. And let's say that one contract is, I don't know, $3,000. You only got one of them. And let's say the contract is up, but you still want to stay in the stock, but you want to tuck some of those profits. That's when you roll. You'll roll for a higher strike. You can probably keep the same date. You roll for a higher strike, so then it generates a debit for you. You take that debit in the form of profit, and you still stay in the trade. So that's the way I would roll. I wouldn't roll if I'm already losing, because then it just puts more on the line to be lost, right?
Got it. Okay.
If I'm losing, I need to cut my loss and just stop the bleeding.
Okay, but why not do what I did? Like, I sold it.
Mm-hmm.
I sold it, break even. Then you just buy back in.
That's what rolling is doing.
Well, rolling, you mean rolling by selling off the option? Because I sold the option at break even.
Yeah,
I didn't lose I didn't make money. You know what I mean?
Well, yeah, like you just sold. So you rolled, but in pieces. So rolling is doing everything that you've done, but in one transaction.
Okay.
So are you saying like sell and then buy back in like a month later or 2 weeks later, like that?
Buy back in, but extend the time. So buy another option for same strike price, but give yourself another 5 months. So I gave myself 5 months. Mid-January, for me to be in profit, it would have had to be over 440, right? But it didn't go there. So I just sold it off. I didn't lose money. So I should have just bought the option again. Same strike price, but extended the time.
Yeah, you could have rolled and did that. You could have, again, you still, since you weren't at a loss, you can roll and do that.
I didn't know how to do that.
Well, yeah. You can. So the option to roll is going to let you adjust the strike and adjust the time, whichever one you need.
But it's going to cost you more money.
Right. Or it could cost less. If you're buying a higher strike, it could cost less.
But then you've added to your base cost.
You said you're adding what to the base cost?
When you roll, you add to your base. Say you spend $5. Then it costs you $2 more to roll it. You've now in total spent $7. But what I did was I spent, say, $5. I sold it off at $5. I didn't make money, but I could have bought another option for another $5. Basically, I'm taking my money back and then I put it back in.
Right. Yeah. So with rolling, you can do that. So rolling is, all right, if you go in with $5, right? And let's say you go in with $5 and you're like, well, I bought in at the wrong time, right? You could just sell and buy another contract. Or you could roll and it will you can buy a different strike for the contract with more time at the same exact price. Or it may not be at the same exact price. Let me not say that. It could be $5 more or less. So if you look at the option chain, there's space to say, okay, my strike today is $5, but I think that I need more time on this. So to not generate a credit and to not necessarily give me a debit, I can pick a higher strike at a later time that balances out and gives me the same price. Because there's options priced at the same price, just depending on what you want to do. You can have a $1,000 option that expires in a week because it's in the money, Or you can have a $1,000 option that expires in a year because it's so far out the money, right? So it's two ways to, you know, price the options depending on how you want to do it. So this is why we call them options. Whatever strategy you want to go with, we have, you know, there's an option for it. No pun intended. But yeah. This is the name of the game, is, you know, multiple ways to look at a cube. It's just whatever makes sense to you. But again, in my opinion, I just don't roll when I'm down. If I'm down, I'm just gonna cut the loss. If I'm up, I'll roll to take profit out of it, but stay in the trade. Especially if I have a low amount of contracts. If I have like under 7 contracts, yeah, I'll roll and just keep what I got and, you know, keep it going or take my profits.
Okay. I see.
But yeah, are you gonna? So you're thinking about Microsoft still?
I'm thinking about Microsoft because I think that we made a mistake. Like, I think that we should have kept our eye on it for another option. Because I think it will go to 500. That's obvious.
Yeah,
It's gonna go back there.
My question is always when. When you're talking options, it's when. If you're talking shares, then yeah, you can go to sleep for a year and wake up, it'll be at 500 for sure.
Okay,
But
if you put another call option on this, how would you do it? What's the strike price? What's the time frame?
430. 430 for what? June? I'm doing June, July, 430 is what I would do.
So you're
June,
doing
July?
in the money call.
Yep, I would go in the money because it keeps. How many times are we going to get faked out before we learn? And so it won't happen again. I will go in the money just to protect myself. If I know it's a finicky stock that has been struggling with momentum for the past last 90 days, I wouldn't take a big chance on it. I would go safe in the money. That way, if it pulls back too much, I can get out without too much damage. Because again, we have to think about the implied volatility that's going to be added to the contract based on your strike. If you go up to 450, 500 with your strike, and it goes back the other way, you're going to be hurting. Like, it could roll back $5 and you could be down 30% because you set that strike so far out. But if you put your strike in the money and roll back $5, you could be down 7%.
And that's because the theta heats up the contract.
Yep, the theta is eating away at the contract, right? You got time decay that's working. And the more time you add, when you're in the money, time decay is slowed. And then the more time you have, slows time decay as well. Time decay speeds up within the 30-day window. But approaching that 30-day window is still getting faster and faster and faster. It's just pretty much that 30th day, 29, 28, that's like the sound of the gun starting the race. Once it hit that 30, it's speeding up. But before that, still getting there, but it hasn't hit its stride yet. So I would go 430 for a strike.
Hey, LJ, what do you think about Marvel Technology?
What's the ticker?
MRVL.
You mean Marvel?
Oh, yeah.
Marvel.
Marvel.
Kramer loves Marvel. I love the sound effects, LJ.
That's just my natural reaction when I'm looking at, because I've been on both sides of these. Like, I've been in a play to where I had a call and it did this for me, and I'm like, man, I can't wait until the market opens the next day. I've also been in the play to where I had a put and it did this, and I'm like, please don't let tomorrow come. So when I see charts like this, I know somebody lost some money.
Oh my God, that sounds biblical.
That's why I act like that, because it's like, yeah, somebody just got toasted for sure. 23%. Yeah, somebody got smacked bad, and somebody just made a lot of money.
What is that green line on the top? What is that?
Green line on the top. That
Yeah. What the hell is
what?
that?
This dotted line?
The green line, yeah. Is that where the price went and there was a huge gap?
Yes. That's why I did that.
What?
This is
That's
a
so
candle.
bizarre. How the hell did it do that?
Earnings.
Earnings.
Damn.
Right. Now you see why I did that, right? Like, that's what I was doing that for. You didn't see, you
I
didn't see
haven't.
this.
No, I caught it later. I just thought you didn't make that sound because you didn't like the chart.
Oh no. No, it was because of this. This is a 23% day.
The hell did it do a 23% day?
Yeah, that is a spike. It's $100 billion company, 23% spike off of earnings. This came from earnings.
Oh, that's like Netflix back in 2021. Netflix did that.
He take his day out.
Yeah, this is massive. The only dangerous part about stuff like this is that it's coming down. Now, the reason why I said that it's dangerous is that we all know that it's going to cool off at some point, but it's probably going to stay up here for a while. So what normally happens when you have a situation like this is that people immediately go in and buy puts on this, right? They see it's up 23%. They go ahead and buy puts because they're like, okay, 23%, it can't go any higher. But when you have a stock that squeezes like this, do not buy any puts on it. The reason, if you buy puts on it, it's like throwing fuel to the fire. The pressure, the downward pressure is just going to keep it up there. People are going to, because when you start to have a short squeeze, people who are getting the shorts who are getting squeezed, they have to buy more of the stock to actually get out of their shorts. So when they're buying more of the stock, it's sending the stock up. And the people who are buying the puts are making them get out sooner because they're sending the stock up. So never buy puts on something like this. And I know most people, when they see it, like, oh, I'm going to put this, I'm going to buy puts. And the next thing you know, it's at 125, and then it's at 130, and it's at 140 because they keep buying puts and they just won't let it start to come down on its own. So, yeah.
So for that one, you just stay clear and wait.
And don't even touch it. Don't. Like, I know it's tempting. Oh, it's up there. It's going to come down. Trust me. I've been stuck in enough of these to know. I promise. Now, don't get me wrong. You may get there's a 10% chance that this comes crashing down tomorrow. From the 23% is up today, it could be down 20% tomorrow. But that's probably not going to happen. We trade in probability.
Do you think that one's going to run again because of the earnings? Or it's just, I know you don't even play earnings.
Do I think that this is going to continue to move higher? I don't think we got another 23% in there, but this one could do another 2 or 3% if you just want to squeeze something out real quick. But that's dangerous too because you're playing a 82 RSI on the day. And it's like, if you're going to try to get in and just get in the little squeeze that it may make from 118 to 125, you're saying that this RSI is going to go from 82. You're going to play an 82 RSI up to like an 85, 86 RSI, which is extremely dangerous. You can see that this RSI right here, when it hit 74, it immediately came right back down to 70 and then came all the way, what stopped here at 63 and then came back down to 50. So it went from 74 to 56 in like 3 days. So high RSIs is a scary thing to play. But again, the fact that it just did this off earnings, I've seen enough to know that people are immediately trying to short this. People are buying puts on this right now, and it's going to sit up there because they keep buying the puts. They won't let it just come down. Let me see. We look at a lower time frame. Yeah, this thing is up there. Yeah, it's an 83 RSI on the 4-hour. Yeah, I wouldn't touch it.
You wouldn't touch it.
Nope. Again, I like probabilities. How probable is this to work out in my favor? If there's a question mark right there, you gotta move on to another stock. You said what now, Jay?
I'm saying it's a question mark. So that's a gambling, right?
Yep. If it's a question mark, you're gambling. If you want to gamble, go ahead. It may work out for you, but if it don't, just know it was a gamble. I can't tell you which way to go, but I've seen enough of these to know. And again, like I said, I've been on both sides. I've been the person that woke up in the morning and saw this and was like, man, I can't wait to turn my $250 into $1,800. I've been there. But I've also been on the other side to where I'm like, man, I play earnings. I thought it was going to go down for sure. It was up too high. And then something like it goes even higher at 23%. And now the 250 I put on, the gamble of earnings is now gone. But no, good stock for sure. But a day too late, it looks like. What's the day? The 4th? This is the 3rd. Yeah, you would have to be in before that. But continuation after it comes down, still a good stock to pay attention to. And it's in a semiconductor, so that probably helped too. The whole market was running too while this was running, so it was like a match made in heaven. Market decided to run on the day that this had earnings that it beat, that it already popped. So it was carried by everything else too.
Got it.
But no.
Got it. LJ, what are your favorite indicators that you use? I see you star chart, RSI, MACD, RSI.
Yeah. Favorite indicator.
Or indicators.
Yeah, I would say my favorite indicator is probably the MACD. The reason why is because these MACD crossovers are the explosions that you need for certain things to happen. Even if you're swing trading, let's say you're not even trading options. These work extremely well for options, but if you're not trading options and you're just trading shares, these still give you the pop that you need. And you can see that this was a match made in heaven. Earnings, market ran up, and then the MACD was just crossing over and it exploded. And you can even see, like, on the histogram, we got a large green bar to show that it popped to the upside. So MACD would probably be my favorite. Second is going to be RSI. After that, I think they're all equal. But a lot of times I'm guided by my MACD and my RSI. Again, if my RSI is too high, like someone said, hey, should I buy this? No, I'll never buy 82 RSI.
Okay.
As far as shares, options, it depends on the story behind why it's at 82 in the first place. But shares, investing, no, I'll never buy 82 RSI stock. Cool.
Yeah. Okay.
Any other questions? What time are we at? We're at 9:30. Ran a little bit over, but that's cool. A lot of good stuff. I didn't even go over my strangle or my straddle.
No, but we got dominoes.
Yeah, sure. The people are going to be like, yeah, you're talking about, the straddle and the strangle, honestly, is matter of fact, I tell you what, we'll take these last few minutes to talk about a way to do one of them, right? So a strangle is a straddle. The difference between the two, right? So I'm getting them mixed up. A strangle is when something has already moved to one side and you want to protect yourself to the opposite side of whatever that major move was, right? So that is a strangle. It's like when I used to play baseball, they called it choking up on the bat, right? Like double, making sure that you have a firm grip and you're locking in that position in that location, right? Same thing. If I'm in this stock and I want to play a strangle, right? I'm up 23%, whatever them options are probably 5, 10x, 15x probably, depending on your strike. But if I want to protect my downside, what I would do if I'm playing a strangle is buy a put, right? Because I'm already in it. I'm already up. Let's say I'm up 700%. What I could do is it's at 118. I could buy a 115 put that expires in 2 weeks. All right. I'll buy that 115 put that expires in 2 weeks. And if this decides to drop, cool. It'll cash me out, right? I can sell that put. I can sell both of them actually. I can sell the call at the top and sell the put while it's coming down. But the way that I would do this one is that as soon as the one, let's say the call I have more time on. Let's say the call that I have for this option expires in January, right? So I got about a month and a half, 2 months left. The put that I would buy expires in 2 weeks. So as soon as that, I got to take the put first, right? So as soon as my put starts to cash out and my strangle setup, I'm taking the money from that put, sitting it to the side, and then I'm waiting to see where do I need to take my call at, right? I may take both of them at the same time if I think that that put is going to continue to increase in value, but I know that I don't have that much time on it and I have more time on my call. So I'll take them together, or I'm going to take them one at a time. So I'll take the put and then I'll see, okay, is there any small pop that I can get back to the upside for my call? If not, I'll take them together. So that's a strangle. Does that make any sense?
A little bit.
I know it's a little complex for you, Jay. It's probably your first time.
Yeah.
So it's ways to protect. It's just a form of insurance. And a strangle is what you do when you're already up, in my opinion. You can play strangles other ways, but if I'm already up, you can just tuck something up. You can tuck a put up underneath the stock while it's up. So if it decides to fall down, it'll cash you out on the downside too. So you're just not at a loss, right?
Gotcha. So if it doesn't go up, I mean, if it doesn't go down, it just continues up, you're getting paid on the call.
The bigger call anyway, right?
So
and the cheaper put only has 2 weeks. So it may start to get burnt up, but guess what? Since it only has 2 weeks, you didn't spend that much money on it anyway.
Got it.
So it's just protection, because if this decided to fall out the sky from 118 down to 105 and you have a 115 put, that 115 put is going to start to compensate for what you lost on the initial move up on that call. So you're not at a complete loss. It still balances your percentages out. So it's just a form of insurance. It's like an insurance policy that you buy on a car. You pay insurance every month, but you don't use your insurance every month, right?
Yeah.
Sometimes you'll set up a strangle and the put that you buy is going to get burnt up, and that's fine. If you're up $2,000 and the put that you bought was 175, I mean, it's like I'll pay 175 for protection on $2,000 versus losing $1,000 off of my $2,000 profit because I didn't pay $175 to protect myself to the downside just in case it happened. Does that add more to it for you, Jay?
No, that makes a lot of sense. I'm reminiscing on the time that I wish I would have known you about in 2021 when GME popped and I did a dumb move and put a lot of money into the stock market.
It's all right. We'll call that paying tuition.
Paid the college note tuition.
Right. That's all it is. It's all good.
So I gotta make that back.
It's possible. It just, again, I think it all depends on risk appetite. That's the biggest thing that I think will separate. Again, we just looked at dominoes from Warren Buffett, right?
Yeah.
That slow guaranteed money, it just depends on risk appetite. How risky are you? How patient are you? That's the only thing that separates any of us. The patience, the more patient you are, the more you're probably going to win. Like when I first started trading, I tell people this all the time. They say, how often were you trading options? I knew about options when I first started trading. I did swing trades for 7 months straight. Just swing trades. I didn't touch one option. I had people that started trading with me that were I made $10,000 today. I made $5,000. Nope. Swing trading. I had to just make sure I understood what I was doing, even though I know I had to run my race in my lane, right?
Yeah.
That was swing trading. And swing trading, you can't lose that much money unless the company goes under, right? Like you're not going to have a 75% loss in one day on a company. That we just had a company that had like an 80-something% loss, but it was a finicky therapeutics healthcare company. That doesn't happen that often. Like you're not going to have Microsoft, which is $3 trillion, lose $2 trillion, $2.5 trillion in a day. It's not going to happen. But yeah, I think that, just figuring out what works for you, figuring out what type of trader you are versus the trader you want to be. Sometimes people want to be a day trader when it's like the way your brain and your nerves work, you're not built to be a day trader. Like if you panic all the time and you don't know how to control your anxiety, day trading may not be for you. But if you can keep a steady hand while everything is just flying around you and you can focus in, day trading, scalping may work for you.
Mm-hmm.
So it's just figuring out what type of trader you are and then just becoming that trader versus what everybody else is doing. Everybody else is going to be doing options and they're going to be doing their type of options, day trading, you name it. But if it doesn't work for you, you want to go with something that works for you. And the market has all the, all the different tools. So again, I started with swing trading. And I think that my day trades are good, but I still think if you give me a swing trade, I can hit on way more. You can give me 10 swing trades and 10 day trades, and my percentages on swing trades are going to be way better than day trades. Can I still day trade? Sure. I think I'm fairly good at both, but I just enjoy swing trades better. And I think my percentages just show that swing trades are easier, even with options.
Yeah.
But that's just me.
Some of them ones that you called, when was it? Was it Sunday? Yeah, they all pop. Every single one of them, I think you called, all of them pop this week.
Yeah, I mean, again, the swing trades is kind of my thing. I did that for 7 months only. So when everybody else, they've only been actually trading for, I don't know, a year, but they're doing a lot of different everything. I did one thing every day, 7 months. That's all I did. But yeah.
Can you take us through one day how you swing trade?
Sure. Like what do I do? Like how do I find it, set it up, enter, exit?
Yeah. Like what was your strategy over the 7 months?
Oh yeah. I can do that. We can, matter of fact, next option session, I'll do it.
Okay.
I'll break down the whole swing trade or how I think about it.
I've been really fortunate with swing trades. You know me, I've been swinging on my short-term account, right? I've been doing well.
Right. Yeah. Swing trades again. I mean, you just have a better chance of being successful with swing trading. You make money slower, but I mean, what's the point of making money fast if you also lose money fast? Right. Swing trades give you time to adjust, to think, to take in news, to double check the chart. It gives you that buffer of safety, in my opinion. It also gives you time to load into a position. Like, options, you may have one good entry, and after that, you're kind of waiting until you exit. With swing trades, you may enter 3 times and get out once. And those entries that you bought the 3 times could be a falling wedge down the steps. It pops to the upside, you're good. And again, that's the same way I thought when I turned the 600 into 20K with Tesla and Ford. Is I literally just swung it. It was not a day trade. I did a day trade at the end, but the majority of that 1,200%, I did a 1,200% swing trade for 2 weeks. So yeah, I think swing trading. And again, that's just my opinion. But yeah, we'll go through a whole breakdown of what I pay attention to. We'll actually get in something.
Let's get in something.
Yeah, we can actually get in something.
Yay! Because I'm not loving the dominoes play.
You said you're not?
No, the dominoes option, I'm not loving it.
It's cool. It's just slow. It's like that's the only thing. It's like, is Domino's going to make money? Sure. You got Buffett behind it. People are just going to buy it because he bought it. So, I mean, you kind of win there, but it's going to be slow. So, like in the
but we don't know if he's going to pull an Ulta Beauty and just sell it. Do you know what I mean? Like, we don't know.
He got in at a good time though. Like he bought Ulta when it was a falling knife, which I still don't know how he bought it, but this one is actually coming back up. And this one has some promise. And he just played a gap. So people are buying this up, and they were buying it before he even got into it. So yeah, we'll look at something. I don't know if it's going to be dominoes. I'm going to continue to watch it. I may add it to my watch list tomorrow and post it in the group. But again, it's just slow. It's really slow, like 1% a day slow. But let me stop this recording. Where's my cursor?